Boom, baby, we're live. Welcome to Tokyo Crypto Show, Season 2, Episode 141. We're explaining why the crypto market recently crashed. A lot of, newcomers were freaking out. And, this was arguably, some people will say it was a black swan event or maybe a gray swan event. But we're going to talk about everything. We got the whole panel here, and we're just going to go deep into this entire breakdown. We pretty much put our finger on it. So what we're gonna do, we're just gonna jump right into it. Starting off with Alex, he is just gonna show us what's going on with the strength of Bitcoin and give us his technical analysis on that.
Groovy. So let's jump right in. We had obviously crypto took a huge shit alongside the global markets, a nice big liquidity kind of event. Good news is bull market has not been invalidated. So I can only sit here and buy the dip really. The other day when it was crashing, sort of already fully allocated, but could swap around to a few other coins and things. And so, the net result of all of this is I have more crypto now than I did before it dropped. So, life's good. We just wait and see. I'll throw up a share screen. Share screen and dun. All right, how are we looking? We can all see this beautiful trading view window. Yes.
Yep. Beautiful. Good to go.
Full screen. So, Bitcoin. We flew down. If you jump back, to our very first show where we're talking about where do we think Bitcoin's going to go, I was always of the mind that literally below 49.7, if it closed below there, I'd be thinking, yikes on the bull market. And what do we know? We came down pretty much all the way to hit that and flew right back up. So good. We have this huge, now I'm not sure how large it is on everyone's displays, but we have this massive spike of volume, which is great. That's what you want to see for a low. Not all lows come in on massive volume, but if you see massive volume and then a big spike back up, that's good. So if we look just on this exchange, Bitstamp, we had about 3 and a bit times the usual daily volume happening just on this exchange. So that's good. We've flown back up to 55. Weekly, I don't expect Bitcoin to do very much now. I mean, for reasons that we could spend hours going into it, but basically it's below this line. So it's just going to chill out for a little while. We were thinking that maybe next 60-day cycle, we might attack the all-time highs again. With this big drop, it might be pushed back a little bit later, but bull market's still on. It hasn't gone low enough to invalidate it. So all we can do is just buy the dip. Ethereum got kind of reamed. We can see another huge, this is sort of similar to everything else, big volume days. Like you can see how little it all is and then whoa! And Ethereum really shat the bed. Like we're in $3,500 territory. And then, within a week, we're down here at 2,100. So massive, not good. This entire bull kind of market, Ethereum's been lagging a bit. As you've heard us all talk about, we're much more excited about Solana. That's been holding up well. Similar thing, big volume, and flew right back up on the same day. So it's looking pretty good. Obviously, we'd like price to keep flying up, but if it takes its time, that's fine. Until it goes low enough to invalidate the bull thesis, we can only assume that peak in 2025 is still on the cards. That's where we're going. So if you got shaken out, then you really got to use this as a big learning experience. If you look at the Fear and Greed Index, that went from a couple of weeks ago, we're up in the 70s. We're up in like greed time. And then last week it was where we dropped for those 2 days. It shot all the way down to like 26. So we've gone from literally euphoric to everyone screaming, running around on fire in like a week and a bit. And that should sort of twinge something in your mind where you go, that's quite a fast flip. Is this actually the end of the world, or is this just one of those things that just kind of happens as we go through? If you feel if you kind of like felt your asshole tightening up when you were looking at the chart the other day, then that's a good sign that most people are feeling that. And so that's generally not the time you want to be selling, because even if that was, we're coming down, there is always a reaction that flies up on these huge down days. So even if you if you wanted to get out and you waited until today as opposed to on the day, you would have 20 or 30% more crypto, because that's how much it has retraced in just a couple of days. So that's another thing when it comes to these big days and you're like feeling, oh my God, and everyone on Twitter is going, oh my God, and the whole world's just on fire. Just take a deep breath, because everything's fine. That if you want to get out, then that just means we got to wait for the exit. Don't just spaz out and emotionally throw all of your hard-earned money into the bin. So in closing, big event. We'll go into more of the details now. I'm sure James especially wants to talk and go in about, the Japanese yen and everything going on there. This was much larger than crypto, similar to March 2020. It was sort of a big global liquidity crisis. So this isn't like an issue with crypto. This is an issue with global markets. So it is, it deserves to be taken seriously and thought about seriously. But in terms of, and it's done technical damage on the charts. Like, we shouldn't be down here if we want to keep going up, basically. Like, this is not a high price, but it's not low enough to say it's all over. It's just, all it tells us is we're just going to kind of go sideways. We're going to, we've been distributing and we'll eventually swap into accumulating again. And then as we get towards the end of the year and into 2025, off we go. And all of our bull market predictions and everything, they're all still valid. So really, don't freak out. Just chill out. It's all good. Just buy some more. Yeah.
Great stuff. Really good. Yeah. There's a lot of data out there. I mean, because like what you said, this did not invalidate the bull market. Few people bought the actual dip. A lot of people say buy the dip, but few people actually do buy the dip. I was lucky enough to, I literally timed pretty much the bottom. And I bought something. So that's good. And then I kind of
lucky son bitch.
Yeah, luck is not on my side when I got you guys.
All you have to do is be in the chat, James. I was sitting there on the 5-minute chart, be like, "Fuck it, that's it, that's it."
No, I wish I had some dry powder. I'm up to my tits with the crypto, dude. I mean,
it's all good. No money. Good. Just so you guys know, we have a private Telegram chat that we put together. We have 17 people in there. It's called MLD Crypto Team 6. All these guys are members, and we've been in there since December. These guys have put together some phenomenal reports. And like I said, the bull market is still on. It is not over. Something that was kind of wild. I saw this, just kind of to build on to what Alex just said. This was from what we found on Twitter. And this is typically what you see is like it's the stages of the bull market. So you have accumulation at the beginning, trend emergence, momentum building, first sentiment extreme. I would argue that was probably somewhere around, I would say that was probably around like March-ish. March was like when it was fucking really crazy. And then now we have this big drop off. That was I think that weekly candle you showed me for Solana was the largest red candle it's had in a long time. It was a pretty big one. This is the bear trap. And then so based upon this here, we look like we're set to go up, because in addition to that too, if you take a look at this is an actual chart of the history of Bitcoin and the strength of Bitcoin. And right here, this, on the left-hand side, you have the years, and then on the top, you have the months, and then the percentages of gains that have happened in the month. And so if you take a look at August, last year it was 11% minus 40%. That's typically always red. And then September isn't so good either. So it just kind of seems like these 2 months are then they bleed out. We obviously had a phenomenal March, 23%. And then obviously January, that's when the ETF launched. But March was when everything, because it was already on top of, if you add this is 40%. And then on top of that, that's a 53% gain in a span of 3 months, which is absolutely insane. And then we started having the bleed out. We did have it up 11% in June. And then August, like I said, the history of August has not really been pretty for Bitcoin. And then looking at September, it's kind of the same. But then now October, and that's when we've been looking at things. October, now you might want to slightly discount this 28% that we had in October last year because that's when news of the ETF leaked. And so that was why it was so exponential. But even in previous years, I mean, 2021, we're up 40%. 2020, we're up 28%, 10% here. 2018 was down. 2017, that was the real first big bull market that caught a lot of people's attention. That was up 47.9%. And then obviously the next month, November, that was fucking crazy. I remember that was a fucking amazing quarter four. I made so much money, and then I lost it in January. But I mean, I just think the sentiment is pretty legit, looking pretty good so far. We're gonna see, but like I said, based upon past trends, October is looking like the place to be. So James briefly mentioned the Japanese yen. We're going to talk about that because the reason why, Steve, I want you to build on this if you can, but is it because TradFi, the stock markets had a really, really, really bad day as well. Was that also due to the Japanese yen trade?
Oh, absolutely. One thing that it was partially caused by the yen carry trade unwinding when the Bank of Japan chose to raise their rates in like around late July. This was unexpected. With the carry trade, the more that the interest rate gap becomes shortened between the United States and Japan, the less profitable the yen carry trade becomes, especially on the Japan side of things, because since they're borrowing in the yen, when the Bank of Japan chooses to raise its rate, that means that the money that's being loaned out specifically is becoming more expensive, and now they have to pay interest to the bankers that they would have loaned it from instead of getting the money for nearly being free. So all these carry trades becoming unwound, all these assets being bought in yen suddenly became sold to pay off these loans that they had back in Japan. It wasn't the only thing, however, that the market chose to sell off for. The Institute of Supply Management's manufacturing index, which is pretty much a fancy way of measuring all the industrial activity in the US, came in weaker than expected. Any reading that's beneath 50 is contraction in the manufacturing sector, and any reading above 50 would mean growth. The market expectation was above 48. However, when the print actually got released, it came out as 46.8%, which was surprisingly bearish and surprisingly weak. This scared people. The other piece of bad news that also really scared the stock market and traditional markets was jobs came in at 114,000, when I believe the expectation was above 150,000 for growth in non-farm payrolls. These two pieces of news really set things off. Does this necessarily, knock off the bull thesis that we have? No. Is the risk outlook raised a bit? Yes, I would say so. There's other admitted bad signs in the market. We've had this ongoing inverted yield curve. Recently, loan companies actually released their earnings, and right now all the stocks that give cheap loans, short-term loans out to people, their stock is going up because their book of business has been doing really well. Well, why would their book of business be doing really well? It's because American consumers don't have much cash left. Their savings are beginning to crack. All that stimulus from COVID, all the stimulus checks that people might have saved over time and whatnot is beginning to wear thin, and that's beginning to hurt the economy a bit. This also showed up as the 10-year yield falling. Normally, I would be bullish on assets and things like the stock market and cryptocurrency if you have a falling 10-year yield. However, in this case, it's falling because people are scared, which means it's falling for the wrong reason. However, I will bring up some bullish points because it's not all bad news. With the 10-year yield, for example, that has been inverted. The yield curve has been inverted because there's been a long-term expectation for interest rate cuts now for quite a while. I mean, people were talking about interest rate cuts as early as last March. And the 10-year yield, or inverting with the 2-year yield, That usually occurs when there's an expectation for interest rate cuts, and it's usually taken as a bear sign because interest rate cuts happen when recessions are likely on the horizon, when the Federal Reserve is scared about the economy shrinking, which is why it's considered a bear sign. However, I will mention that for the longest time, jobs were actually well outperforming people's expectations. Inflation is actually still falling. Oil prices have really begun to come down in spite of it being summer. So those inflationary pressures on the American economy are also going to go down quite a bit. So given that there's been this long-term expectation of interest rate cuts coming, I wouldn't consider it as much as a risk indicator for recession. I will mention, though, that Goldman Sachs recently came out with a report saying that they've increased their recession risk, I believe, up from 15% to 25%. So if you want, a big name, company giving you its risk outlook, Goldman Sachs says it's a 1 in 4 risk. And, if they announce a recession, if they announce that jobs growth came in outright negative, that of course would crash markets. And there's no doubt about that. So a 1 in 4 risk is one way to look at this. I will say though, in my own view, I'm kind of surprised that jobs have done as well as they've done for as long as it's been. It still is positive growth in the jobs market, so that doesn't mean that that's necessarily contracting yet. We're just seeing slower growth than before. Generally, earnings at many of the big name companies, spare tech, have been pretty solid. If you look at earnings reports across most stocks in the S&P 500, they've still come in healthy. So, if there was some huge downturn in the economy and people weren't spending money, this would be reflected in companies' earnings, in company earnings reports. Aside from this, another bullish points that I would like to make is that do remember interest rate cuts are going to be brought in a little bit more aggressively now because of this weak manufacturing data and weaker jobs data. So instead of it just being like one cut in September, the outlook has been now raised to 2 or 3 cuts this year. So one in September, another in November, and I believe the next decision would come in December. And I would also note on the cryptocurrency side of things, all the major investment groups that have these ETFs set up, none of them sold their positions. None of the big dogs in crypto, none of the people that chose to set up the Ethereum ETF, the Bitcoin ETF, have chosen to sell their positions. So, and remember, their analysts and their research and their access to information, I hate to say it, but it's ultimately better than ours.
Yeah.
It's better than ours. They have access to information we don't. They have insider trading, and they're not selling their positions. So I still remain bullish on the general outlook of things. Just know, guys, that the risk picture has invariably increased a bit, and please be aware of that, is what I'm saying.
Thank you so much, Steve. That was a very in-depth
That was amazing.
analysis.
Ugh.
Yeah, and you could just take a look here. So this is what it looked like from a visual perspective. That was what happened. Like I said, it was about $3 trillion were wiped out, and that was it. And then if you looked at, I mean, it was even affecting like the pornography department. Like they had this thing. It was like interracial couple fucks the entire economy. So that was that was got a lot of clicks as well. Yeah, so interracial couple fucks the entire economy. That's something we got to be careful with watching out this upcoming election season. Seems to me though they now James or so real quick we'll go to Elias because Elias wanted to add something, then we're gonna go to you, James. Okay.
All right. I just wanted to add a quick overview regarding Bitcoin and how to put the current dip basically. So I'll share the screen real quick. What you see here is the weekly chart of Bitcoin USD. And if we go from the last top we had here and check how many, so only the candle bodies, how much we went down. We are at a bit over 18% in the red right now.
Mm.
And this, if you're coming from TradFi or from stocks or something like that, this seems a lot basically. But if we check the other green phases of the Bitcoin cycles, basically from the halving to the all-time high, this being a projected one. But if we check the older phases, for example, this one from 2020 to 2021, so the last phase from the halving to the last all-time high, we see that it's pretty common. So in this bull phase, we had a dip of over 13% here, nearly 14%, then over 15% here, and then here over 20% even, right before the first top. And if we go back even more, still on the weekly chart, to the area 2017, 2018, and 2016, we had even bigger ones. So they are getting smaller, slowly but surely. But still, this is only a few years back, and we had nearly 25%, over 35%, and over 20% in dips during the bull phase. So for Bitcoin, this is completely normal. The only thing we have, or at least I personally, I'd like to see to confirm that we are still in the bull phase, basically, and there's nothing to worry about, is that this last bottom we had here is hold, and we close at least the monthly candle above this bottom at around, where is it, 55.6K. So this is basically what I want to see to confirm that we are going up again. And if we check also the RSI, back here we see that if we have a nice bottom here now and then go up again, it's a pretty nice cool down of the pump, basically, or of the bull phase.
Yeah, we've been going sideways basically since March. Yeah.
Yeah, hard to say, more or less. We're a bit down till then.
Mm-hmm.
But for, at least from my perspective, for even though we had the Japan situation, we didn't break this bottom here at 55.7K. Or we dipped below it real quick, but we aren't under it. So I think that's a pretty strong sign for Bitcoin.
Yes, indeed. Looking good. Looking real good. Awesome, man. Thank you so much for that. So, real quick, somebody asked in the chat, why is XRP up 20%? They won their lawsuit. They have to pay $125 million in civil penalties, and they're going to be able to operate without any problem. So, but I mean, Ripple is still dog shit. don't touch Ripple. Like these people that buy Ripple have no money. They have nothing going on for themselves, but they're just like so determined that this thing is going to be amazing. Ripple is a shit coin, and you should avoid it at all costs because the whole market has been ripping right now, and Ripple has just been. I mean, if you just take a look at its chart here, this is history. Okay. So it peaked over here in 2017 when it went up to $3. And since then, or this was 2018, January 6th. But then since then, like even last bull run, it got up to $1.79 max. And then you can just see this is just a terrible chart. This thing is just fucking dying. So
yeah, if you're going to get into an altcoin, it has to be beating Bitcoin. Otherwise, there is no point.
Yeah.
No point.
Yep. Relative.
I don't care if you
strength,
believe in the project, like you're going to lose money. There is no point.
Yeah.
No point.
Absolutely. James, so the Japanese carry trade, the yen carry trade, can you explain that to everybody? Because this is pretty much why the whole world just shat the bed, I would assume, right?
Right. So they call it the carry trade, right? But it's really what it is. It's just leverage, right? People borrow money to speculate. Then the speculation didn't go right. Then they had to liquidate to pay the loans back. That's all it was. So as we know that Japan has been keeping their interest rate near zero and sometimes negative, which makes the Japanese yen really cheap to borrow, which means you're not going to pay any interest on it. So, but then you have something like, on the other side, NVIDIA, which has been going up, 30, 40, 50% every year. So, let me think about this. If I can borrow yen with a zero interest, then convert that to dollars, then use those dollars to buy NVIDIA, which has been going up year after year. So pretty much I'm kind of guaranteeing that, hey, I'm using almost free money to make these 30, 40, 50% returns every year on NVIDIA. Oh, by the way, I can use the margin account to 3, 4, 5x NVIDIA, so I can get even 3, 4, 5x the return on NVIDIA, right? So that kind of assumes a lot of things here, right? That Japanese will keep their yen cheap or the interest rate low. There will be a pretty steady or constant exchange rate between yen and whatever the currency that you're using to buy the security, right? And the security you bought will perform as it has for whatever the previous, how many years or months you were looking at.
Mm-hmm.
So what happened was that a few things happened, right? Japanese said, hey, we cannot take this cheap yen anymore because yen and Nikkei is collapsing, so we need to raise the interest rate. So they start raising interest rate.
Sorry, I'm just going to tell the audience, the Nikkei is like the Japanese stock market.
Yeah, and as you know, from living in Tokyo, you were, benefiting a lot from the great exchange rate almost a year, right?
Oh, yeah. Since 2022.
Yep. So now the Japanese start raising interest rate. Then going back to what we were talking about, Stephen was talking about, the recession fear came in. Even Buffett sold half of his Apple shares. The job numbers didn't come in great. Then the other thing I think that spooked the market was that the odds of Kamala Harris has started going up in all these polls and the betting markets, right? So remember, one of the last big little bit of bull run we had was right after the debate that Trump blew Biden out of the water. And it was a sure thing that Trump was going to win against Biden. But now, with the Kamala coming in, market, it's not sure about things now, right? Especially from the media saying that, hey, she's polling better than Biden. So what market hates more than anything is uncertainty. So now we threw another uncertainty on top of the bad job number and, possible recession number, right? So that spooked the market and brought the asset price down on the market side, which triggered the margin calls, which triggered the loan payback on the yen side, right? So it kind of cascaded all the way back. So everything is based on borrowed money, right? It's like you borrow 90% to buy your condo in Florida, then the Florida condo market collapses, the bank come and say, hey, you need to put down more equity or we're going to have to foreclose your house. That's what happened, right? So these companies, they don't usually hold one asset in their portfolio. They're trading multiple assets, right? So instead of just, if they were borrowing yen to buy NVIDIA, they didn't have to just sell NVIDIA. They had to sell their Bitcoin. They had to sell their Microsoft. They had to sell their treasury. That's why you saw all the asset classes collapse, right? Because they were selling everything to cover their equity in their homes, right? So then they'll get foreclosed. So what happened is that's why all the asset class price collapsed and all the liquidity kind of left the market because all these firms had to unwind these complicated trades. Does
Yeah.
that make sense to you guys?
Mhm.
James, can I just add, when it comes to being margin called, like you said, the bank will say, "Oh, we need you to put down some more collateral to cover the mortgage or the loan you've got." When it comes to getting margin called, though, like we can see on the chart that when we have like a big peak in fear all of a sudden, it's going to reverse in the next day by like a significant amount, 10, 20,
Right,
30% of whatever went down will go back up. But if you
Yeah.
say to the bank, listen, I know I'm about to be margin called, but like in 2 or 3 days, it'll go back up. It always does. The bank goes, I don't give a fuck. Give me my money.
Tough
And
shit.
they just
Tough
liquidate you. So you
Liquidate.
get liquidated at
Over-liquidate,
the
right.
lowest
Yep.
price. You get liquidated at the lowest price. You don't
Yeah,
get
think about like
Yeah.
Solana went down to 105. So if you were holding Solana position, I mean, you knew it was going to bounce back. I mean, more than likely, right? And now it's up to 150 2 days later. You can always say to the bank, hey, you know what? I know it said 105, but you know it's going to come back to 150 in 2 days. Nope.
Yeah.
You were liquidated
They
automatic.
just pull the
Right.
plug, bang, because they just want
And-
their money back. Yeah.
Yep. So
No
that
risk,
kind of
no risk to the
came
bank.
through the system and across to all asset classes.
So crazy. Like Japan had their currency go up in like a week by like over 10%, and then they had the entire
Yeah.
stock market drop by 20%.
Yeah.
But now Bank of Japan came out this morning or yesterday morning saying that, oops, we didn't know it's gonna fuck things up. I guess we're not doing it anymore.
Yeah. So did Steve, did they reverse the rates or are they keeping the rates? They're keeping it,
Oh,
right?
Yeah, the Bank of Japan's keeping its 25 basis point current set. They're keeping that set. But one thing is that some people sort of started to speculate that they might raise to 50, but Kazuo Ueda came out and said, no, we're not going to raise another 25 basis points.
Huh.
I'm sorry, 250 basis points, my bad. Yeah.
You're good.
Kind of
So-
going back to what we were talking about, the trade and unwinding of trade. We call it the leverage in the traditional finance, right? It's borrow money, pretty much what it is. You're borrowing money to speculate. Well, in traditional finance, you call it the leverage and you call it the gearing, right? Gearing because, in cars, gears make the engines either, make the engines more torquey or more powerful, right? So it puts a different spin on the engines. So the gearing or the leverage is great when the trade works in your favor because your return is multiplied by the ratio of that gearing or the ratio of that leverage, right? But if the trade goes against you, it hurts you exponentially more because it hurts you, based on the gearing, right? So it cuts both ways. It's a two-edged sword in that way that, you got to know exactly what you're doing with the leverage, and you got to be damn sure because it cuts both ways.
You were saying that Bank of Japan is kind of reversing something like what were you saying?
Yeah, so I read one of the news articles and a tweet saying that Bank of Japan is saying that, we're going to pause what we're doing until the market stabilizes, right? So whatever that means, these central bankers, they like to use these vague terms and whatever, right? Non-committal, statements. They're saying that, hey, we think we fucked up. I think that's the gist I'm getting. Then we're gonna kind of wait and see what happens before we do anything else.
Steve, do you know why they raised the rich? Because this is why it caught everybody off guard. So they were doing this for 17 years. 17 years. So since 2007, since the great financial crisis, okay, the great recession, they have been lending out Japanese yen at 0% interest. So they're literally just giving yen away for free. And out of nowhere, they're like, yeah, we're just gonna, because there's no warning on this, right, Steve? Was there any warning on this? That's what they just did it out of nowhere.
Very little. A couple of people speculated it could happen, but
There was no official warning or statement from Bank of Japan. They just came out and did it. Yeah.
yeah.
There's actually a rumor going around. Grandma Yellen went to Japan and China twice this year. right? Already. The speculation is that China is almost used as a growth engine for the whole global economy, right? Because they're a manufacturing sector. Well, they're not doing too well right now, and they need to cut the rates to stimulate their own economy. Well, Japan is cut in the middle between the West and the East, and both China and Japan are saying, hey, we need to stimulate our economy, but we can't because one of the biggest roadblock to stimulating our economy is the strong dollar. Dollar is too strong. You guys need to bring the interest rate down, right? And I think this is kind of the prelude leading up to Fed start cutting the rates, right? Now, kind of with this, market correction or crash, you want to call it, it gives more of an excuse for Fed to start cutting rates instead of saying that, hey, we're going to still look for, inflation data before we start cutting. Now they're saying, well, we're going to have to start cutting.
Yeah. Would you like to go, Adam?
Yeah, it was a bit of a self-perpetuating cycle because you notice that the last couple of years the yen was doing really bad against the dollar. That was people were buying it, like not buying it. They were getting it, borrowing it, and then selling it essentially to buy dollars. So the yen kept going down while the US dollar kept going up. So that even incentivized them even more to keep on borrowing more. And that's why you see because if I'm not mistaken, Forex usually doesn't have, the Forex market usually doesn't have a 10% moves in 3 days.
Yeah, no.
Currencies don't tend to do that.
Yeah.
So seeing Japan, the yen suddenly jumped that much in like a couple of days, because everyone panicked, sold their positions, and then had to sell their dollars into yen to repay the loans because the loan originally was paid in yens.
Yeah,
because
Bank of Japan kept their rates pretty low still, right? And the Chinese start cutting their rates. Europeans start cutting their rates. U.S. is the only country or the major economy that is still not start cutting rates, right? And I think that's one of the big reasons they're kind of saying, hey, you're going to have to kind of start cutting. And I think that's one of the reasons that Janet Yellen went to China and Japan twice this year.
Steve, I want to ask you something because, again, guys, the yen has been legitimately in relative free fall here for since 2022. Honestly, let's just go to 5 years. But yeah, see, the yen was doing okay up, and then I remember in Q4, this is when it's they did a lot of spending, but then it just they do something to try to make the trade a little bit more balanced. It was down to 127 at the beginning of last year. But then it just keeps going up. Steve and James, do you think that this interest rate move was a move to strengthen the yen as well? Was that a strategy, you think?
So one of the people that's sort of a lieutenant to Kazuo Ueda, the current head of the Bank of Japan, she said that one of their main reasons for doing the move was that they figured that household spending was low and people's willingness to go out and spend money in the real economy was low because they saw increased inflation, particularly from input costs. This would be things like the price of grain, the price of oil, what it costs to import aluminum. Since all these import costs are going up because the yen's so weak, people wanted to spend less money because they saw the price of everything going up and they wanted to wait till easier times to spend money. So they figured, okay, maybe if we lower these import costs and lower the rate of inflation a bit, the Japanese consumer is going to want to reopen up their wallets. So we need to go ahead and raise rates to try and strengthen the yen. A little unheard of because most central banks are supposed to only look at inflation and unemployment. To expressly do an interest rate cut or raise to try and prop up a currency's value against other currencies is pretty untraditional. But, there was political pressure to do this. Two LDP heavyweights, Toshi Mitsumotegi and then Taro Kono came out publicly and said, yeah, let's go ahead and raise rates, guys. They're not really supposed to do that, but they felt the need to pressure the Bank of Japan anyway. the LDP's approval rating has been really, really, really low recently. So they might be figuring, hey, if we suddenly give Japanese consumers a sudden bump up in their purchasing power, maybe that'll help the approval ratings. But that's just my conspiratorialness bleeding through this. Sorry.
No,
I
like,
think
I
I
think
think one of the biggest problem with Japan is that Japanese people are not having babies. There's no more population growth, and population actually is going down with the aging population, right? So the workforce is shrinking, as
Yeah.
well as the economy is shrinking because of it. So I mean, and
Yeah,
they're
and
trying to kind
it's-
of stimulate it or kickstart the economy by just dumping money into the fire, and it's not working.
and it's also it's the wages, man. Dude, Japanese people are fucking slaves, man. Like,
Mm.
you know, this chick I'm seeing, she told me her boss demanded a fucking 100-page report from her. 100-page report on one of the digital marketing clients that they have. And on top of that, this chick gets paid before taxes. She gets paid, and this chick works like a fucking slave, man. Let me just convert it real quick.
I was gonna ask you, Steve. Do you think that the
20
job crisis?
2,500. She's 27 years old. She makes $2,500 a month before taxes.
Yeah.
Before taxes,
And that's full time.
full fucking time, bro. Full fucking time. So that's why, and it's because a lot of these old, because Japan is just, these old people need to fucking hurry up and die. They're the ones running this country into the ground. Boomers, boomers are
It's true.
across the fucking globe. All these old Asian people, all these old Asian men in Korea and Japan just need to fucking die because they're so out of touch with reality. They
The
have no
boomers.
idea what's going on.
Boomers.
The fucking boomers. Boomers just we need another fucking boomer virus to fucking wipe them all out. Because they still think like 36 or like 360,000 yen a month. They're like, oh, that's good money. Yeah, in 1995 when you were young, you fuck. Like now it's just like literal slave wages. And then the work culture here, that's why these motherfuckers are killing themselves all the time. Like it's just like run of the mill. Like, oh, just fucking Bob killed himself. Why? Just stress of life. Same thing.
That's that's happening just like you said, John. That's happening in Korea and China also now, right?
it's
And
I
so
think
that's
it's
why these three huge economy in East Asia, they're trying to do something, right? And none of them are having kids, right? So, and the populations are aging, so there's more healthcare costs, more pension costs. Productivity is not rising. I mean, it's a huge problem. And one of the big things is that these three countries, they hate immigration.
Yeah.
So they close the borders.
Yeah.
I mean, I understand that immigration brings its own problems, right? But even they start having kids today, it's going to take 18 to 20 years before those kids get into workforce.
Yeah.
So they got to do something.
I'm an immigrant in Tokyo, and I fucking hate other immigrants here. So I don't want to fucking immigrant. I'm like Dave Chappelle, like the black white supremacist guy. Like that's me. I'm like, fucking disgusting foreigners ruining Tokyo. Go back to Pakistan. I fucking hate them all. So even when I see Americans, Elias, you were gonna say something, buddy?
Yeah. I just wanted to say it's like it's pretty common for exporting nations because often they export something that is high production value or high value add to a product and import foodstuffs or basic resources. It's pretty much the same in Germany and many European countries. So if they have the problem like China, like Japan, like South Korea with the aging population, what happens is that after you get some inflation, basically the prices for food and other stuff skyrocket, while the own currency is plummeting, which is good for exporting nation because others can import their products cheaper. But in the end, for the people living in the exporting countries, the effect is that basic stuff that you need for living gets more expensive, and this leads to lower consumption of other stuff like telecommunication stuff or stuff you don't really need, which is often a higher value add product that's actually produced in the country itself. So this makes complete sense from the Japanese perspective, basically, because this way they might trigger more consumption of their self-produced products and don't hurt exports that much anyways.
But all that still cannot overcome population decline, though. That's the
Yep.
problem.
And
Yeah,
it's too late for
Oh,
China
sorry.
too.
I
Yeah.
was telling Steven too. Like every time I get I get like a racist like a stare from a racist old man. I'm just like, should have had some more kids, you fucking faggot. Like I don't know, you go to all the whorehouses, and guess what? Now you got to look at me, and guess what? I'm gonna be here longer than you because you're on death's door. So sorry, pal.
Actually, those Asian cultures are like infamous for living like way too long. Say anything you want about Americans being fat, but they die fast. Like Japanese and like Asians in general live to like 120 years old sometimes.
The women do, but like the thing is with them though, like they live long, but they're fucking useless. You
But they
know?
are taxed on this social security then, because they gotta be maintained somehow.
Listen, a lot of these Japanese old people, they go to the doctor for fun. Like there's a joke here. They're like, oh man, Bob's not here at the doctor today. Why? You're like, oh, he's actually sick. Because like, it's like a social club. And again, they just they're mad about the immigration, which I get it because like the fucking the 7-Eleven downstairs in by my building is just like all full of like Indians and Indonesians, and it's just so disgusting. It's just like, you guys, is this place like fucking India? I don't like going to convenience stores where there's no Japanese staff, because there's a gigantic difference in the quality of service, the cleanliness of it. So the immigration shit here, it is problem, but at the same time, like, hey, you should have had more kids. I don't know what to say. So I don't know. Just get rich and fucking escape to somewhere, guys. Speaking of which, just want to show you guys. I put my money where my mouth is. This was a screenshot. I'm not going to say what I bought, or how much I did buy of it. But these little green dots are indicators of where you buy, and that was at the dip. I actually bought like right at the bottom of the wick. So I bought the dip, and I'm already up in profit. So like I said, during this markets, you have to. This is why, again, we put the show together the way we put it together: math, facts, news, everything. No hopium. No like, oh, it's definitely gonna go to the moon, bro. None of that shit. We just want to bring hardcore facts. And speaking of that, Adam, you noticed a pattern with the ETFs, because another thing is this, guys. BlackRock, like what Steve said earlier, BlackRock, Fidelity, all the big fucking companies with ETFs, guess what? They did not sell. They actually bought. Mr. 100 was accumulating massively as well. I heard he just dumped off some, though. He did make a quick little trade. He had the largest sell-off. I think he sold like 6,000 of his coins. But Adam, you want to go in there?
Sure. Just fun fact, the short started and Bitcoin was at like 55,000, and now it just breached 57.
Oh, wow.
Like,
yeah, that's good.
Yeah.
That's good.
So I noticed that during the weekend, the ETF, I'm going to share the screen now.
Okay.
You can see, right?
Yep.
So,
Full screen.
So during the weekend, the ETF for Bitcoin had outflows of like around 120 million, something like that. But the Ethereum ETF had an inflow of like 100 million exactly. So take that 20 million extra and discard it. I noticed that essentially it looked like they were migrating funds. So maybe some of the companies that got into the Bitcoin ETF early on are now rotating some of the capital into the Ethereum ETF to get in early, because remember, it just came out like 10 days ago. So maybe they're essentially like trying to catch this wave as well, while leaving some in the Bitcoin ETF still.
Mm-hmm.
That is something I just noticed. Also, I had no idea about the Japan stuff. Like no one could have really predicted that they were going to raise the rates. However, you could have technically predicted that there was going to be a crash during this time. So I mentioned it in the group, in the Crypto Team 6 chat.
Mhm.
So if you guys remember, like 2 weeks ago, I had a hopeful scenario for this Bitcoin 60-day cycle, starting from this candle over here. And I expected it to end around early September with a peak around August 20th, something like that. However, ever since last week, I started noticing that we were starting to go down. And just like 6 days ago, essentially when we broke below this previous bottom, that's when the cascade started to go pretty hard. So essentially, the outlook for this cycle, this 60-day cycle, is now a bearish cycle, a left translated. So essentially, what we think, or what I think at least, is that the top for this cycle happened on July 29th, which would be 23 days into the cycle. So for those who don't know, a brief summary of 60-day cycles is that if the cycle top comes in before day 30, which is the average halfway point, the rest of the cycle will be downward. While if it came in after day 30, it would be a bullish cycle and you would see more upwards action. So considering where we are now, we can pretty confidently say that this was the top. And currently the bottom would be on day 30 exactly. This isn't impossible, but it's not usual. So there is still a chance for a new bottom to be made during the next week. I usually don't count these big weeks for during liquidation events for counting bottoms, because this, especially in centralized exchanges, what happens is that when there is a big liquidation event, they have access to the order books. They know where at what price a lot of people will be liquidated, so they will manipulate the price to get it there so that they can liquidate a lot of people. That's why you see headlines whenever there's a big crash that $20 billion just disappear out of nowhere. They try to do this kind of stuff. So we could potentially see we're right now at 57 almost. We could see something around 53, or maybe just taking the body of the candles, like 54,000, like a retest of that, and then mark that as the cycle bottom, potentially within the next 7 to 10 days, I would guess. If not, then yeah, we could be sure that the August 5th was indeed the cycle low. But we have to see. I just wanted to share that, yeah, you could have predicted fundamental analysis, or in other words, real world events affecting price can never be predicted, but they tend to align with what technical analysis indicates. So yeah, technical analysis would have told you to sell the moment this bottom got crossed on last Friday. And I think the Japan news came on Saturday, actually, if I'm not mistaken. So yeah, the real world event isn't always the cause. The drop was probably coming in anyway. It's just that the news are the catalyst for it to happen. I don't know if I'm explaining myself fully. So it's not necessarily the causation, but it definitely makes it happen faster and stronger, the move.
So, kind of going along with that, there was a guy named Ben Graham. Ben Graham is the guy that taught Warren Buffett how to invest. And he wrote a book called The Intelligent Investor, and it's been Bible for a lot of fundamental investors for decades. And one of the big famous saying he has is that markets operate like a voting machine in the near term, but they operate like a weighing machine in the long term, which means that market is driven by sentiment in the short term, but market tend to be driven by fundamentals in the long term, right? So kind of going back to say, like for instance, Solana from last Monday, which it was at $195,
Yeah.
and this Monday went down to $105, right? So almost a $90 swing in a week. But the question becomes that has anything fundamentally changed for Solana in a week?
Yeah.
No, right?
No.
Unless the network went down or the founders died or it, somehow somebody got rugged or it became a fraud, that nothing really fundamentally changed for Solana in that week. So what changed? The sentiment changed, right? So that means that the price movement from 195 to 105 was a sentiment driven, which means it's a short-term movement, right? Because remember, markets, it's a sentiment driven for short-term, fundamentally driven for long-term, right? So voting machine versus weighing machine. So when you see these crazy prices movement in the very short time frame, we should always ask ourselves, whatever the asset you're holding, be it NVIDIA, Microsoft, Bitcoin, Solana, Ethereum, Dogecoin, Popcat, we got to always ask ourselves, hey, is anything fundamentally changed in this asset?
Because otherwise, it's just people trying to make you sad and capitulate. Like,
Yeah, it's just the sentiment. It's emotion driven, right? If it's not,
like it's like a couple of days ago when it
drop.
was drop, and I was like, well, let's have a look what's going on, and everyone's like, Japan's stock index down 18%, and global markets crashing, and
So
90 students have been 90 students been murdered in Bangladesh. We've got like a revolution in Bangladesh. Martial law's been declared. We've got Iran is going to blow up Israel. Israel's going to blow up Iran.
Yeah, exactly.
UK was like immigrants and far right people are stabbing each other in the streets, and there's freaking things. The Australian Prime Minister came on TV and he's just like, guys, we're raising the terror alert from not likely to probable. Like, what is going on?
It's a very emotion driven event, and it's one of our core belief or fundamental job is to kind of keep you guys away from those getting swept up by these emotions, right? That way you're kind of standing aside or standing apart from the crowd and kind of make intelligent decisions on your investments or trades.
Yeah.
Now that you mentioned emotions, that's what I thought of with the whole pollings favoring Kamala, because like everyone knows polls are manipulated. So
Yeah.
I only got worried when I started seeing her projections in the betting market, because that's people actually putting money where the mouth is. But I think that changed the moment she announced her running partner. I just heard the name Tampon Team, and all I knew that okay, they're not gonna win. They plan on stealing or something.
All those polls are fake and gay. And look, bro, people that are betting on that shit are just fucking retarded. Look at the state of the economy. Look at the state of the United States of America. This bitch was literally second in command. And you're going to be like, yeah, let's just, let's go with her. This I think we'll finally turn this shit around. No.
Do you notice that?
No.
Do you notice that their campaign page has like no proposal? They have no platform to run on. They're just betting on telling people that Trump is bad and weird, and
Orange
that they should
man
beat him.
weird.
Like that tells me that they're planning on stealing it somehow, because there's no promises, at least to like try and fake out that they're trying to do something.
I've heard a rumor that her campaign asked 12 other Democrat politicians to be her running mate, and 12 of them say no. And this was the guy she just picked was the 13th choice.
Tampon Tim.
Tampon Tim, that's what I call him.
I have no idea why. I just heard the name.
Is he from
I think because he was talking about putting transgenders in the bathrooms or some shit like that.
Oh yeah, he put the tampon machines in Minnesota public schools boys' bathrooms. That's what it was.
There you go.
So what are they going to do? They're going to shove it up their ass and cover it with shit? Jesus Christ, man. What a faggot. All right. Well, what are we going to do? All right, guys. Well, look, that's going to do it for us today. We just wanted to tell you guys exactly what's going on. And now you know they have tampons in the boys' bathrooms in Minnesota on top of that. So praise the Lord for that. We'll be back. We'll be back probably next week, most likely. We'll be running some webinars in the Masculine Empowerment Network. So I'll be focusing on that. I'll be back this Friday for Free Consultation Friday. So don't you go away. Stay subscribed. Hit the subscribe button. And until then, we'll see you next time. Peace out.